Good morning and welcome to video 5 in our series. We're certainly getting through these different types of incomes, and give me some feedback. How are you actually doing at the moment? How many have you managed to generate? In video 1, we talked about earned income. So that is setting up a business that is its own entity and you becoming an employee of that entity so that you are able to pay yourself a wage, a salary, and you then have earned income coming in from your business. The second stream of income we talked about was profit income. And with profit income, we are selling a product or a service in our own right, and we are taking the profit out of that once we have paid the cost of the product, the delivery of it, paid the taxes. Whatever is left is our profit income. The third type of income we talked about was dividend income, and we covered a whole range of different types of dividends that you can earn so that you have now got multiple streams of income coming in. And in the last video, we talked about residual income, or in some places known as passive income, and how we could generate that type of income through network marketing or multi-level marketing, through franchising, through creating products that we create once and we sell them multiple times. That's like digital products, training courses, etc. And we also talked about monetizing a YouTube channel and how you can generate a residual income from that. So I hope you're seeing now there is a whole multiple way of generating income streams. And the beauty of each of these income streams is they function differently depending on what the economy is doing. So the more streams of income that you have, the better off you will be. So let's talk about today's one, and we're going to cover interest. Now, interest is very interesting. Interest has, most people think of a bank account when you say interest, and they receive some money for depositing their money with the bank, or rather they used to. Interest these days is extremely low, but you still can earn a little bit of interest. And bank accounts is the main way that most people will think of. But let's think slightly differently. And that's what this is all about. Getting the mind to work slightly differently so that you can see all the different opportunities that are out there. So we know the banks are not paying us very much money. So what about a credit union? I don't know what they're like, but you can search, you can do a comparison, go online, compare different institutions, find out who is paying the best interest rate, and you can put a little bit of savings in there and start earning some interest. Now there's bonds. Now I mentioned bonds as a way of earning dividend income. Now these are bonds that we buy through our share market platforms, but most countries have a scheme where they encourage the citizens of that country to put money into the government scheme. Now, in the UK, the company is NS&I, so it's National State Savings and Investments. What happens is the government, the Treasury Department of the government, are encouraging you to loan them money so that they can run the infrastructure of the country, and they can supply all the services that you want. So it's not just your taxes that pay that, because there's no way they can generate enough taxes to be able to cover the cost of everything. So what they do is they issue bonds, or they have their own savings accounts, and they guarantee the money that you invest with them up to a certain level. Now, each country is different. I know that in the UK, if you go through NS&I, they will guarantee the money that you invest up to £1 million. So you get £1 million in there, and you are guaranteed you will get that money back. They pay you different rates of interest, and they have different types of accounts. So they'll have a monthly income account, they will have a capital growth account, they will have bonds, different types of bonds on there. And as soon as you purchase them, and they vary in price. I think the last time I looked, it was about a minimum of £100 on some, a minimum of £500 on others. And you just loan your money to the government through whichever of the products you see on the website, and they pay you interest. Very simply, you receive interest. Now, I know that America has different types of bonds through, I think it's Treasury Direct is the platform that you use. Italy is phenomenal. The patriotism of the people the citizens of Italy, the amount of money they invest in the Italian government is quite incredible compared to other countries around the world. So there are different schemes with different countries. You just need to do a little bit of research and find out what they are. But that is interest that you will receive on the money that you are lending to the government to help them provide you with products and services. Another type of interest income is through what is known as peer-to-peer lending. Now, peer-to-peer lending it's not new, because I was doing peer-to-peer lending in the 1980s when I lived in New Zealand. So it's not a new concept. It has been around for a long time. But it became a lot more mainstream in the credit crunch of 2008 and in the recession that we had from 2008 to 2014. So there are different platforms out there which cover different types of lending. And in effect, what you are doing is you are putting money into a platform. We'll call it a platform because each of them is slightly different, and you can play around with different things on some of the websites that come up. So we'll refer to it as a platform. So you put money into the platform, and say £10 is the minimum that they will put into a loan. What will happen is you will put £100 in, and that will be split into 10 lots of £10, and your money will be pooled with someone else's money, lots of other people all putting £10 in, and that will form a loan that goes to someone. As that person pays the loan back, they will pay back part capital and part interest. So you receive interest and capital back each month until you get your full £10 back. Now, with these types of lending, peer-to-peer lending, you are not risking all your money because you're only risking a very small amount. £10 is the minimum I've seen on some companies. Some want you to put £50 in, some 500, some 1,000. It depends on what they're doing. And some of the different types of platforms that are out there are personal loans. So if you are somebody who needs to go and buy a new car, or you need to go and get a dishwasher or a washing machine or something like that, hopefully you're not getting a loan for it. You've watched my video about a rainy day fund. But if you are someone that does need a loan and the platform you're going through agrees the loan, you've only got £10 exposed. So if that person fails to pay that loan back, then you've only got a very small amount of your capital at risk. So there's personal loans. Then there are business loans, and in the UK, Funding Circle is one of the biggest known for businesses. So with Funding Circle, you put your money in, I think it's £20 minimum, and they will add that to a loan, and they will then go out to whoever the business is that wants the money. Then you have Wellsley. Now, Wellsley pool everybody's money in and they pay them interest on that money. But then Wellsley use the money how they want to use it to support whatever projects they want to support. Okay, so that you can see there's different types of ways to do peer-to-peer lending. Housecrowd. Housecrowd asks you to put 1,000 in and you become the part owner of a property. Now, these are UK companies. There are peer-to-peer lending companies all around the world. Okay, I live in Spain and I deal with companies in Finland, Latvia, Estonia. So it's not just a UK thing. There are lots of different countries that operate peer-to-peer lending. So what you're doing is you're putting your capital in and you are receiving interest. So I hope that's explained a little bit to you about interest income and the different ways that you can generate that. And you can start generating it with very small amounts of money. So just to recap, you've got your bank accounts, you've got your credit unions, you've got peer-to-peer lending, all different types of them. You've got your government treasury bonds and the different products that the governments offer. So there are multiple ways that you can earn interest income. And when you add that to the incomes that we've talked about in the previous videos, you can see now that if you've done something in every one of those videos, you now have 5 different types of income coming in. And we're well on the way to getting the 8 multiple streams of income.